Good evening. Can you hear me? I'd like to see your comments if you can hear me. Good evening. How's been your trading week? Sure you have a great day. If you can hear me, I want to see your comments. Drop your comments. Good evening. Can you hear me? Can you hear me? Can you hear me? If you can hear me, I'd like to see your comments. Can you hear me? Drop your comments if you can hear me. You're welcome to tonight. You're welcome. You're welcome. I hope your week has been great. Can you hear me? Drop comments if you can hear me. How is the sound? Am I audible? Can you guys hear me? Please drop comments if you can hear me. Drop comments if you can hear me. How is the sound? Am I audible? You're welcome. You're welcome. If there's anything you want us to look at together tonight, please drop it in the comment section. If there's anything you want us to believe you all can hear me loud and clear. If you have any question, anything you want us to look at together tonight, please drop it in the comment section. If there's anything you want us to look at together, please drop it in the comment section. So let's go to the business. First, I want us to look at the fundamentals for the week. Look at the fundamentals for the week. So this week is NFP week. NFP will be released on Friday. And today being Tuesday, two major news was released from the United States, and it was positive for the dollar. You can see the news was positive for the dollar, and that's why you will see GBP AUD USD, Euro USD, NZD USD. Really news got released and it was positive for the dollar. You've noticed that those pairs went bearish. Those pairs went bearish, and I shared with those of you in the trading community my expectations on those pairs. GBP USD, AUD. I told you guys it was gonna go bearish. Technically, it was bearish, and since the data that was released also was positive for the dollar, we should expect more bearish move, and that is what played out. And I also shared with you guys that this week my bias for Euro USD, all these pairs I mentioned, still remains bearish. Still remains bearish. If you're considering buying those pairs, you should know that you're counter trading. Okay? You are trading pullbacks. Okay, you can still make money trading pullback, but you should know what you're doing. You should know what you're doing. So I would advise that you wait for a good bearish setup only look for sell setup. You have a strategy that you're trading and ensure that the setup you have on the chart before executing the trade is a bearish setup. That is what I would advise, okay, that you should stick to. Okay, so um, today is Tuesday. Now, tomorrow, I think there's a major news also tomorrow. FOMC will be released by 8 p.m. tomorrow. Um, ADP, non-farm employment change, and unemployment claims will be released from the United States, and that will be a major driver for price action tomorrow. Okay, look out for this data. So personally, I will be considering trading USD pairs by 3 p.m. after this major news is released. Okay, I'll consider trading Australian USD pairs. Now let's look at GBP USD. Let me share my game plan with you guys how I'm gonna trade GBP USD. Considering this fundamentals news will be released tomorrow by 2:15 and by 2:30 then 8 p.m. Nigerian time. Then by 1:30 a.m. today, Australian dollar CPI will be released for Australia. Okay, and you can see the previous is 2.1 forecast, so they're expecting 0.1% increase. That's the expectation, 0.1% increase. I have a trade on Euro Australian dollar. I shared the analysis with those of you in the group. Considering buying, not considering, I bought Euro Australian dollar and I'm in profit of close to, I think, 20 pips at the moment. Yeah, close to 20 pips at the moment. And a major news will be released by 1:30. A major news will be released by 1:30. If the news does not favor Australia dollar, if it comes out negative, then Euro Aussie would be bullish. If the data, if the actual value is less than the forecast, they should expect more bullish move on Euro Australian dollar. You should expect more bullish move on Euro Australian dollar. But if it comes out positive for the Australian dollar, it's possible Euro Aussie will go bearish. Okay, Euro Aussie will go bearish, but long term trend is bullish. So I will still hold on to the trade. I'll still hold on to the trade, even if the data comes out negative or positive for the Australian dollar. I will still hold on to the trade, okay? Because the long term is bullish on Euro Australian dollar technically, okay? So even if the data comes out positive for the Australian dollar, I will still hold the trade. I will still hold the trade, okay? So that's my take for Euro Australian dollar and USD. Okay, so tomorrow, this is tomorrow. So how would I trade this data tomorrow? Let's go to the chart and let's see GBP USD. So you can see GBP USD is bearish. You can see it's been bearish after the data got released and it was negative for, um, it was positive for the dollar. Those pairs I mentioned just went bearish and it is still bearish. It is still bearish. So if the data is negative for dollar, if it is negative for dollar tomorrow, then we should expect a pullback. Pullback to where? To You should expect a pullback to a premium area. Okay, you should expect pullback to premium area or pullback to fair value gaps. Okay, so we have a fair value gap here. You can see this. This is the fair value gap. The price is likely going to pull back to fill this fair value gap or pull back to the premium area. Let's go to 15 minutes. Okay, so these are the areas I would be considering. You can see we still have a fair value gap here. So I will be considering the fair value gaps residing at the premium area. Okay, the one I just identified on 1 hour time frame is at discount or I think it's 11. So I wouldn't be working with that fair value gap. Okay, the fair value gaps residing at the premium area are more valid than the one residing at a discount area or equilibrium. So these are the areas I will be considering selling um, Euro USD. So if the data comes out negative for the dollar, you should should expect pullback to these fair value gaps. Okay, we should expect pullback to this fair value gap. So if you are considering selling Euro USD tomorrow, you should wait for these gaps to get filled. If these gaps get filled before the news is released, you can still take a sell. You can still take a sell if these gaps get filled. But if this gap does not get filled before the news is released, there is a high probability after the news is released, this gap will get filled. Even if the data comes out positive for the dollar, they might still want to fill these gaps before going bearish. So that's my take on Euro USD. Look for sell. Okay, Euro USD is bearish. GBP USD also is bearish. On GBP USD, same advice I would give. You can see the pattern we have on Euro USD is similar to what we have on on Euro USD, right? This pattern is similar to what we saw on Euro or USD. So the same thing applies here. Wait for price to pull back. You cannot start selling from this point. Your risk will be too high if you decide to sell from the current market price. Okay, you cannot sell from this current market price. Price has already moved. Okay, price has already gone far. This is where you ought to have entered sell. If you're trading my strategy, this is where you should have entered sell. After the close of this 1 hour candle, this is where you should have entered sell. And if you had entered sell from this point, your stop loss will be at this level. Let's say 40 feet stop loss. If you had entered from this point, you would have made close to 1 to 1.5. And at this point, you would have closed partials, right? At this point, you would have closed partials and you would have adjusted your stop loss probably to break even where you entered. Okay, you would have adjusted your stop loss to break even. But in this case, since you have a fair value gap here, since there's a fair value gap, you should, if you're adjusting your stop loss, you should adjust your stop loss above the fair value gap and not below the fair value gap because there is a high possibility that they will come and fill this gap. So you don't want to adjust your stop loss to break even. These are some of the things that some of the reasons people complain that immediately I adjust my stop loss to break even, my stop loss gets hit, price reverses back and hits my SL. So you cannot set your SL below this fair value gap. So you have to wait for price, you have to set your stop loss above this fair value gap. Are you getting me? So in this case, you would have made at least close some partials. You would have closed partials on this trade. You would have made some profit on this trade. Another reason price is likely going to pull back from this point. You can see that we had a fair value gap here. This is a fair value gap. Price is likely going to pull back because this gap has been filled. When you see this gap on 1 hour, this gap has been filled. So price is likely going to pull back because price is at what? Is at fair value gap on 1 hour. If you go to 15 minutes, I'm sure on 15 minutes it will be a discount area on 15 minutes. Let's confirm that. Let me go back to the 1 hour. Okay, and let me apply this line here. So let's go to 15 minutes. So it could be at discount on 15 minutes. Let's see. So you can see on 15 minutes. If we decide to work with this range from this low to this swing high, if we decide to work with this swing low to this swing high, you would agree with me that is currently at a discount area. You can see so. There's a high probability that price will pull back to this area, but like I said, stick to the long-term trend. Work with the long-term trend, which is bearish. That is what I'm waiting for. Okay, that's what I'm waiting for. I want to sell GBP USD, Euro USD. Okay, on GBP USD, for example, I'm expecting price to break this low. That's my expectation on GBP USD, this low. I'm expecting price to take this low, which is an area of liquidity. That's my expectation on GU. So if price pulls back to at least price to do a 50% retracement. For those of you who watch the video I dropped on video on YouTube, I told you guys what I look out for. Okay, price is trading far below my entry point. So price must do at least a 50% retracement. 50% retracement. So if price pulls back, let's say this is 50% retracement, my SL will be at this level. That will be about 50 pip risk on this trade, and I'm aiming for this low. That's about 164 pips. But before the market will get to this TP, I would have taken partials. Since I'm risking 50 pips on the trade, my first TP will be 75 pips. This will be my first TP, this level. As you can see, there is a fair value gap. Can you see the fair value gap? Can you guys hear me? Can you hear me? Can you hear me? If you can hear me, please drop a comment if you can hear me. Drop a comment if you can hear me. If you have anything you want us to look at together, please drop it in the comment section. Okay, drop it in the comment section. If there's anything you want me to analyze, drop it in the comment section. So you can see there's a fair value gap here on 4-hour time frame. Okay, this is 4 hour. Okay, there's a fair value gap here on 4 hour. So you can see. So that will be my first TP on the trade. That will be my first TP on this trade. Okay, but I need prices to pull back, because if I decide to sell from this point and I'm aiming for this level as my TP, this is just 31 pips. This is just 31 pips, and my risk, you can see, 101 pips. So the risk reward is very, you can see, is very poor. It's very poor. That is why I have to wait. If I decide to sell from this point, let's say from this point to this point, this is 121, and my stop loss will be at this point, 121. So I'll be risking 96 pips or close to 100 pips for 121 pips. That's a very poor risk reward. So price must pull back. You cannot jump in and start selling GBP unless you've executed a trade. Okay, so going with my strategy, like I told you guys, first thing is to, let's start with the daily. Okay, so first thing you want to look out for is the daily time frame. So on a daily, what played out here on a daily time frame? Price tested a resistance level. Can you see that? Price tested a resistance level on a daily time frame, and there was a strong rejection from that level. So after that is confirmed on a daily time frame, we go down to the next lower time frame, right? We go down to the next lower time frame, and what will be confirmed on the next lower time frame, which is 4 hour in this case. And the candlestick pattern also formed. The bearish reversal pattern also formed at that area. So this is what we had. You can see. This is it. After price tested that resistance level, okay, you can see the pattern that formed here. This is bullish, and the next candlestick closed bearish. Now on this 4 hour time frame, it's not too clear. So what you need to do in this case, go to 1 hour. Go to 1 hour, be sure a bearish reversal pattern formed on 1 hour. And also you would on 4 hour confirm that price is at what? Premium. When you see price at premium, if you work with this previous range, if you apply your Fibonacci on this previous range, you would agree with me that price is what? At premium, which indicates that there is a possibility for price to drop from that area. Okay, is that premium? And also, let's go to 1 hour. The bearish reversal pattern has formed on 1 hour. So you can see the pattern that formed on 1 hour time frame. Can you see this? This is a shooting star. The next candle spine top, bearish spine top. Now, after you've identified this, go down to 5 minutes. Okay, what do I want to identify on 5 minutes time frame? The last low that was used to clear this liquidity. That would be the higher low, right? Yes, higher low. The higher low that was used to clear liquidity residing at this previous high. That is what I want to identify on the lower time frame. So let's go down to 5 minutes. Okay, identify the low, the higher low, the most recent higher low that was used to clear liquidity. Okay, so here is the most recent higher low. This is the most recent higher low, right? This is the most recent higher low. So wait for 1 hour candle to close below this low. Let me change the color. Wait for 1 hour candle to close below this low. Okay, so this is it. Let me go down to what's the difference. I also like to calculate the difference. I want to ensure that the difference from this point to this point is not more than 50 pips. You can see it's not more than 50 pips. Okay, I want to ensure that it doesn't. The difference from this point to this point is not more than 50 pips. So this is about 50 pips. So let's go down to 1 hour candle should close below. So you can see this is the 1 hour candle that closed. Okay, this is the 1 hour candle that closed below. Good, good. This is a very good example. You can see the 1 hour candle that closed below. This is the 1 hour candle that closed below. And like I told you guys, if you calculate the risk involved, if it is more than 60, wait for price to do a retracement. That's what I told you guys. Wait for price to do at least 50% retracement. So this 1 hour candle closed below that low, which is a shift in market structure on 5 minutes time frame. So calculate the risk here. You can see, okay, this is 51 pips. So you could have entered sell after this 1 hour because the difference is not up to 60 pips. If it was up to 60 pips, you would have waited for retracement, 50% at least retracement. So you would have entered around this area because this is the fair value gap that was created. So price had to pull back, tested that fair value gap before it dropped. But you could have also executed the trade from that point. You would have taken a sell after this candle closed below that low. And you would have made close to 40 pips on this trade. So this would have been the entry on BDP for today's market. I hope that is clear. If there's anything you want us to analyze, please drop it in the comment section. Okay. Then which other pair? Australian dollar USD similar pattern. GBP USD is still bearish, please. It is still bearish, but wait for price to pull back to the premium area before you sell. Like I told you guys, when you open the chart, you want to identify where price started dropping. If you want to sell, if you want to buy, look at where price starts going up, and you know the setup, the pattern you're supposed to see on the chart before you execute buy or sell. If the price has done 50 pips, at least 50 pips from where you ought to have entered the trade, patiently wait for price to pull back. If price does not pull back, let the trade go. Let it go. Okay? Price should pull back. You know what you're supposed to see. You know when you're supposed to have entered the trade. When you open the chart and you see that price has gone far, let that trade go. Wait for the next opportunity or wait for price to pull back before you buy. And if you insist on taking that trade, if you don't want to wait for price to pull back, reduce your lot size. Reduce your risk on the trade. So let's say you're trading 0.1 lot size. Let's say that's the lot size you use on every trade you execute. Now the market has gone 50 pips from where you ought to have entered the trade. You can use 20% of 30%. So 30% of 0.1 lot size will be 0.03 lot size. You go in with that, and when price pulls back to your entry, your point of interest, then you go in with the remaining 0.07 lot size. That is how to manage this. Okay, because it's possible price will not pull back to that your point of interest. Trading, I always say it is a game of probability. Nothing is certain or guaranteed. Okay, so you just have to apply discretion. Okay, you also need to apply discretion when you are analyzing the market. Apply discretion. Okay, so that is it for example, I took a trade on Euro Australian dollar today. Yeah, I took a trade on Euro Australian dollar today. Like I said, it's in profit. It's in profit. So at what point did I let me check the price I entered the trade? To check the analysis, the price I entered the trade is different from the price I sent on the group. The video I sent to you, the analysis I did, the price I entered is different from the analysis that was sent to the group. It's different. 2 minutes, please. Let me confirm the price. 16577. 16577. 16577 parameters. 6577. Okay, so this was my entry for for EA. Okay, this was my entry for EA. So what was my analysis? The analysis I dropped in the morning. My entry was supposed to be 1.6590. I think. Like my analysis was supposed to be also my entry level was supposed to be 6590. So I entered buy after the formation of this candle. Okay, after the formation of this bullish candle, that was when I entered buy. Okay, guys, I was expecting price to pull back, which it did. It pulled back, and after this candlestick pattern from here, this is a bullish candlestick. Also, if you go back here, you will see that a fair value gap was a fair value gap. You can see this was a fair value gap. You can see this is a fair value gap. So after this pullback was to fill this fair value gap here. It filled it, and the candle that closed, closed bullish. If you also go down to 15 minutes, this is 1 hour time frame. The fair value gap on 15 minutes is different from the fair value gap on, I think, on 1 hour. Okay, so on 15 minutes, this was the fair value gap on 15 minutes. This was the fair value gap on 15 minutes. So price came back to fill that gap. So that's the reason I took the buy trade on Euro Aussie. Now after that candle closed as bullish candle on 1 hour time frame, I went down to 15 minutes. On 15 minutes, you definitely you'll be able to identify a bullish reversal pattern on 15 minutes. Let's go down to 15 minutes. Let's see what we have on 15 minutes. So you can see what we had on 15 minutes. This was what we had on 15 minutes. You can see this is a bullish reversal pattern on 15 minutes. You can see this is a bullish reversal pattern on 15 minutes. Now went down to 1 minute or 5 minutes. Identified the most recent high that was used to clear liquidity. Okay, identified the most recent high that was used to clear liquidity. Okay, this is the high on 15 minutes. Sorry, on 5 minutes. Sorry, this is the high. This is supposed to be my entry 659. Yeah, 6590. 6590. Let's go down to, let me see, 1 minute. Are you guys see it? Can you hear me? Okay. Same level on 15 on 1 minute. You can see this is the last high that was used to clear liquidity. Okay, so same with the 5 minutes. So that was the reason I took the trade. Okay, so waited for 1 hour. Let's see at what point did 1 hour close above that level. Okay, 1 hour close above that level at this. This was where I took the trade after the close of this bullish candle. The close of this bullish candle. That was when I took the trade at this point. I hope you're following. I hope you're following. I also dropped a signal on GJ, which actually played out. GJ, let's see GJ. Can you guys hear me? Can you hear me? Any question? If you have any question, please let me know. So so let's start with the daily. What do you have on the daily? So you can see daily. It's likely going to close as doji or shooting star. It's likely going to close as a doji or shooting star. If it closes as a doji, then you should expect bearish move on GJ tomorrow. You should consider selling GJ tomorrow. If GJ today's candle closes as a shooting star or a doji or a spinning top, then you should go bearish on GJ tomorrow. Go bearish on GJ tomorrow. Okay. Now after the close of today's candle, let's assume the candle has closed. We'll go down to 4 hour to identify the pattern on 4 hour. So what pattern do we have on 4 hour? I tell you guys, this is a Marubuzu candle. And the Marubuzu candle, what happened? It formed as, you can see, a premium and also filled a fair value gap. You can see that it filled a fair value gap, formed as premium, price at premium, and also it filled a fair value gap. Also, liquidity has been cleared You can see liquidity has been cleared at this point. You can see this candle was used to clear this liquidity. So Marubozu candle formed there. Okay, now after that Marubozu candle formed, what you would have done here was to go down to this is 4 hour time frame. Go to 1 hour, confirm the candlestick pattern on 1 hour. It should be bearish also. It should be bearish. So you can see it is 1 hour time frame that actually confirmed that the trend has changed from bullish to bearish. So you can see the patterns we had here. We had an angry man and we had a spinning top. You can see the bullish spinning top. And after the formation of the bullish spinning top, we expected to wait for the next candle to close bearish. You can see, and the next candle close bearish. So this would have been a sell on 1 hour time frame. But like I advise you guys, wait for price, identify fit market structure on lower time frame. So let's work with 5 minutes higher low. Let's work with 5 minutes higher low. If there's anything you want me to analyze, drop it in the comment section. We'll be ending the session in a few minutes. Okay. If you have any question, drop it now. Okay. So where is the higher low on 5 minutes? Here is the higher low on 5 minutes. This is the higher low. This is the most recent higher low on 5 minutes. Okay. This is the most recent higher low on 5 minutes. So next thing is to wait for, you have to wait for 1 hour candle to close below that level. Okay, 1 hour candle to close below that level. So let's go to 1 hour, which is the candle on 1 hour close. Okay, so this is it on 1 hour. Can you see this? This is the first candle that closed. This is the first candle, right? Yeah, this is the first candle that closed below this higher low. Can you see that? So let's calculate the risk involved. Let's calculate. You have entered sell from this point. Your stop loss would have been at this level. Let's say you use 40 pip as your stop loss. 40 pip as your stop loss. Market went in your direction is about 60, about 56 pips. 56 pips. If you had missed this first move, if you had missed this first move, you would have waited for, let's say, this retracement to occur. Then you would have entered sell after this pattern, this engulfing pattern. Are you getting it? This would have been the best entry. Sell your stop loss at this level. If you don't panic, you have held on to the trade, because I know a lot of people after this pullback, many will panic and exit the trade. Many will panic and exit the trade, but you need to know what you're doing. So if you had held on to the trade, you definitely would have made good profits on on GBPY. That's about 88 pips. And the risk you took on this trade, how many pips? The risk would have been how many pips from this point to this point. I've carried to this trade also from DJ. I posted it on the WhatsApp group. Okay, I took this trade 40 pips, 101 pips, 101 pips. So what I did when the market, when I made a profit of 70 pips, I did again 70.5 pips, I take partials. I close 70% of the profits. I close 70%. Once the market goes in my direction and I'm in profit of 70 to 75 pips, I close 70% of the profit. So that was what I did. The market went in my direction, 70 pips, I closed partials. So I used 0.1 lot size. Then I closed 0.07 lot size at 70 or 75 pips. And the remaining lot size, which is 0.03, is still running, it's still active. Okay, so I'm still expecting GJ also to sell tomorrow, but price might pull back to here. It might pull back to this fair value gap. So if you want to sell GJ tomorrow, patiently wait for price to pull back and fill this gap before you sell. I hope that is clear. So that's my take on GJ. Is there any other thing you want us to analyze? Is there any other thing you want us to analyze? Let me know. Let me know. Slandler USD, similar to what we saw on GUE. You can see same pattern, similar pattern. You can see that. So on AE, all you have to do is wait for price to pull back to this area, this fair value gap. Okay, wait for price to pull back. This should is likely going to occur before the major news is released or after the major news is released. Okay, then you should look for your entry at this fair value gap. That will be the best time to sell. If you sell at the current market price, the risk will be too high. Selling at this price, your stop loss will be at least your set of stop loss here is about 57 pips, and your first ticket could be at this level. Even if you use this level as your ticket, you can see the risk reward is very poor. It's very poor. That is why you have to wait for price to pull back to this area. For those of you trading with small accounts, you have to be patient for price to pull back. Someone who has good accounts, who has good capital, to take this trade from this point, you could go in with small lot size, and the price pulls back to this area, you go in with more lot size. Okay, so you have the capital, you're able to manage risk like a professional. Okay, you're able to manage risk like a pro. But if you have $50, $100, you'll be taking high risk on your capital. You'll be taking high risk on your capital. And that's the reason many people blow their accounts. They are undercapitalized. They are undercapitalized. Okay. Any question? I believe you can hear me. Any question? Do you have any question? Let me know in the comment section. Let me know in the comment section. Do you have any question? Let me answer to your questions. Any question, Mr. Victory, Mr. Daniel. These are the people I can see their names. Mr. Victory and Mr. Daniel. These are the people I can see their names. If you're yet to like the stream, please do. Please do. If you're yet to like the stream, please do. Any question? Any question? Any question? Are you guys see it? Can you guys see any? Are you still here? So, in the absence of questions, I would have to end the session. Any question? Any question? Any question? Any question? USD card. Let's see USD card. USD card is the buy. Look for buy on USD card. Let's start with the daily time frame. Let's start with the daily time frame. Okay. So you can see what's the pattern on the daily time frame. See the pattern on the daily time frame. This is an area of liquidity. So this is what we have on the daily time frame. Okay. This is what we have on the daily time frame. Okay, so let's go down to 4 hour. Most likely the price would be at a discount on 4 hour, or if the value gap has been filled on 4 hour. Let's go to 4 hour. So this is what we have on 4 hour. We go back here, you can see what we have here. This is a fair value gap in 4 hour time frame. Okay, this is a fair value gap. That gap has been filled, and the market is currently trading above that gap. So this bearish move that occurred here, I think, was to clear the stop losses, liquidity residing at these lows. And that's the reason for this bearish move. We've cleared it, and as you can see, the market is currently trading above that zone. Okay, it's currently trading above that zone. That tells me demand is higher than supply. It tells me demand is higher than supply. So that is a buy. That is a buy. So there is a high probability the liquidity residing at these highs to be cleared. it will be clear. So if you want to trade USD CAD tomorrow, don't be in a hurry to jump in because the major news will be released for the dollar tomorrow. The major news will be released for the dollar tomorrow. So if you wait for price to cool back, I would not advise you buy from the current market price. Wait for price to pull back to a discount area. Okay, this is a fair value gap. So this gap has been filled. You might still want to test it. Okay, wait for price to pull back. Wait for price to pull back before you buy. That would be my take on Euro. Sorry, USD card. You never can tell which support is fake. Okay, or invalid. You can't. You never can tell. Okay, you never can tell which one is invalid or fake support and the resistance. Okay, you never can tell. So if you're trading support and resistance, you should work with higher time frame. The support on higher time frame, support and resistance on higher time frame most times has it has a high probability of holding. It has a high probability of playing out. It is more valid than lower time frame. So if you are trading with resistance and support, I've always told you guys apply it on higher time frame, daily, weekly, monthly. You can also use 4 hour. But support and resistance on 1 hour, 15 minutes, 5 minutes, 1 minute, those are not strong support. They are not strong support or resistance. So work with higher time frame support and resistance. Okay. I hope that answered the question, Mr. Victory. Okay. Any other question? Any other question? Any other question? Any other question? For those of you who have subscribed for the trading community, trading will commence fully next Monday. Trading will commence fully next Monday. So we'll be having our Zoom sessions from next week. And like I said, when you're coming for the class, you should have your trading plan. I expect you to send me your trading plan. You will be analyzing the market. You are not just coming for the classes to hear me talk. Okay, you're not just coming to hear me talk. You would be analyzing the market. I believe that is the sure way to grow or to become a very good analyst. Okay, so next week Monday we'll start. We'll start trading. And we'll start having the meetings. Okay, probably we'll be having meetings at night. So I'll prepare for the next day, and the next the day then we'll have review session also probably at night. Yeah, so I believe if you follow instructions that I will be given in the community, you will definitely you will excel as a trader. You will do well as a trader. You do well as a trader. Any question? Any question? Any question? Any question? I see here. Any question? Any question? Any question? Please, if you're here to like the stream, please give it a thumbs up. Give it a thumbs up. Any question? Any question? Any question? Any question? Any question? All right. So I guess there are no questions. So I guess there are no questions. So I would have to end the session. I want to appreciate every one of you who joined this meeting. The notification was an impromptu one. It was impromptu. I appreciate you guys for still showing up for the class. That tells me you're serious. That tells me you're serious. Okay. I really appreciate it. Okay, I can only see Mr. Daniel and Mr. Victory. Others, if you don't comment, I can't, I won't be able to mention your name. So Thank you, Mr. Daniel, and thank you, Mr. Victory. That will be all for tonight's session, and I wish you all a wonderful, wonderful night.